Good morning, ladies and gentlemen. Welcome back to another pre-market live stream. Ladies and gentlemen, welcome back to another pre-market live stream. Apologize, there might be an echo there for about a half second. Forgot to turn something off. So good morning. All right, so what we first need to touch on is going to be, what can everybody guess? What is everybody going to guess? It's the market. Okay, so the Fed did cut interest rates, and as we spoke of yesterday on the stream, if they cut interest rates, it would be seen as a negative thing because the economy is already strong, so why cut rates on top of an already, so to speak, booming economy, as most mainstream media and everybody points it out to be. So again, why throw more gasoline on that fire? That's the way I see it is. Now, again, the Feds do their monetary policy based on data and based on numbers in which they believe is whatever, right? Good, bad, or ugly. And their rate cut decision, was based on inflationary numbers and the monetary policy that they've been doing. So really, when the Fed looks at things like this, they're not saying, well, if we cut rates, we're going to, only try to boost up the market. But they're doing it for reasons of monetary policy and stimulus of the overall economy, right? That's their main job. So their main job isn't to come out here and just screw everybody over and try and, make the markets go up or down, which way, So, but at the end of the day, again, why throw gasoline on a fire that's already blazing, right? The mainstream media, everybody has you out to believe that the market is the best thing in the world right now. Economy's strong. Yeah, there's strong numbers out there, but that's what it's made out to be, that it's really strong right now. So, again, why throw gasoline on an already blazing fire unless you were really trying to keep the fire going? That's the way I see it, at least. So anyways, we take this really negative downturn. So first, the statement. So right here, when we get this first down candle, that's when the statement was released of the decision to cut rates. And then we kind of dropped and we bounced a little bit. And then this big drop started to happen when Jerome Powell, or Mr. Powell, started speaking. That's exactly when this started happening. When he opened his mouth, and honestly, I listened to about the first 20 minutes of it, then I had to take off. But the first 20 minutes just sounded pretty terrible. Many of the questions that reporters were asking him and he was responding to, honestly, to me, it just sounded like his voice was shaking. He was really just walking on thin ice, trying not to crash the market, to be completely honest. That's the way I felt. But anyways, market takes a downturn. So if you go to look at any single stock from yesterday, they're pretty much all going to look the very same. Right at about the end of the day, you're going to see this really big down drop, and then you're going to see this really big spike up if Apple ever lows. Every single time I type in Apple's ticker on Thinkorswim, this happens. I don't understand it. So screw Apple. All right, we'll go over to BABA. BABA, you can see the down spike there. NVIDIA has one. AMD has one. I mean, most all stocks are going to have this end of day drop and spike up. So this is also a good little mini short lesson that shows you just how closely stocks move in relation to the overall markets. When the overall markets get really volatile and have really aggressive moves to the downside and or the upside, you will see that many of your larger cap stocks or higher market cap stocks will tend to follow almost identical to the market when the volatility increases. So when I say follow the stock market and follow your stock to trade it, that's what I refer to, is when the markets are volatile, your stocks are going to act very similar to the overall S&P 500, Dow Jones, NASDAQ, etc. So that's why I always say follow the S&P and follow your stock together. Mr. Walters or Leda, thank you very much. I appreciate that. So, Soldier Boy, understand that the gold and silver naturally goes up when the dollar goes down, and I'm pretty sure the dollar ended up, and I was having trouble loading this ticker yesterday too, so it's already having trouble loading, but generally whenever the dollar goes dollar goes up, gold and silver goes down. So make sure to track your US dollar as well if you're trading gold and silver, following gold and silver. But the dollar went up, so yeah. What do I think about Micron? Well, see, look, Micron, same thing. End of day, big plummet, bounce. Yeah, Miss Leda, thank you very much. I appreciate it. Yeah, MU. So pulling back. Actually, so far this morning, actually, MU has a decent forming curl. I'd probably, with the way, if the formation that it's in holds, I'd look for a long play out of the gates initially on that. If it holds, like right now, the way it looks, the way it's forming, it's a long out of the gate. Unless it pops and then gets all funky and changes around right now, I would say it's a pretty decent long play. We just came off of, yeah, we just came, but here's the other thing, right, is the true support for the stock is going to be right here at about 43 right now. So this is probably just a relief bounce from the down day. So if it longs out of the gates, don't be surprised if late day gets smashed down, right? It could bounce all the way back up, but this is a nice aggressive move down, usually a short intermediate bounce followed by another leg down into true support, and then there's the bounce, right? So I would say if I were looking at MU to actually kind of like trade it myself, I would like a bounce play down at like 42.65, 43.50 in that area. Recoveries usually don't happen. Yeah, BYND is getting smoked today. Recoveries usually don't happen in like one day. It's very, not very typical. For a way to put it. But again, if you look at gold is still trading within the same channel it has been that it made. It's sure it's down right now, but again, it's still in the same exact channel that it's been in. Right, so yeah, it's just gonna hang out probably in this channel a little bit. I would love it if the dollar would load, but it just doesn't. I don't understand. Yeah, SLV got hit pretty good. Yeah. But yeah, anyways, right. You got to think of these things like gold and silver more long-term plays. It's not something I would ever trade intraday. Honestly, going long out, no. So to going long out of the gate, first thing always comes down to identifying a stock at a good buy point or a good sell point. Because if a stock's at a good buy point or a good sell point in terms of, like a support or resistance, then the likelihood that it moves in that direction is pretty likely. So again, it's like, all right, as the stocks, as gold comes all the way down to like this 130 price, the likelihood that we see it start to bounce is greater. So the likelihood that it starts to turn into longs out of the gates or just first off on the move on the day, it's pretty likely. As stocks get up to higher prices, the likelihood that they start to sell off on the day is greater. Most oftentimes, you shouldn't even try and trade the first couple minutes of the day as it's kind of spiking up or down, because naturally it's very hard to pick direction every single day of which way it's going to go. So more oftentimes than not, you should just wait for the stock to move and then trade it. But most people get fear of missing out, and they think, well, the morning, the first couple moves are the best moves of the day, and if you don't trade those, you can't make any money. But then again, those are the hardest moves to trade because they're so fast and they just kind of whipsaw every once in a while. But yeah, picking direction all comes down to understanding where the stock's been at, how it's been traded, the formation that it's in, which could be based off pre-market support, could be based off of pre-market resistance, it could be based off of a 5-week support. So there's a lot to it for sure. You can expect a little bit more of a volatile day in the market, most likely. Yep. So, anyways, continuing on. So let's go into actually talk about the stocks. So ENPH is going to be on the watch today. This is something that we were watching yesterday, and it ended up having a really good move out of the gates. Another good push. Today, we're going to follow it. Probably follow it long bias. I mean, it's already has a bullish pennant formation, so to speak, going from yesterday's high into the pre-market trading session today. So we're going to follow this one long, see if we get continuation. If we do, I wouldn't expect it to be quite as big as yesterday, but I think there's still a little bit of opportunity for a good push early in the morning on that stock. So going to be watching that pretty close. AMRN's another one that, this one's kind of like, I wouldn't typically watch something like this, but I'm going to give it a shot. Yesterday, I seen AMRN hold this 1850s price really well. You could see it came down, got bought up, and then it went sideways, then it squeezed. And then while the market was dumping, it came all the way down right to 1850, no lower, bounced again. So I figure that's a pretty decent support. And if we can break through it, we should get a little bit of a panic sell-off today through 1850, and I'd look to short it. But that's kind of like this is like an optimistic outlook on a stock, right? Kind of playing something, not like playing something new, but more oftentimes than not, I wouldn't really focus on a situation like this. And it's only because it had its earnings report the previous day, kind of whipsawed, held sideways. So it's going to kind of see if we kind of give in this 1850. If we don't, then I don't really care. It's not like it matters. That's AMRN. Shopify is another one here. It reported earnings today, and they jumped from 316 to 345, so 30-point jump or something like that. More like 20-point, but no, it's about 30. Excuse me. So yeah, big jump. And yeah, so this is going to create for a relatively good volatile day from pre-market low to pre-market high. There's a big range there. So even from, midpoint here at 332, you still have to 345 pre-market high, or you still have to, like 317 pre-market low. So either way, whatever way it goes, there's money to be made if it even tops out at pre-market high or bounces at pre-market low, doesn't go any higher or lower, there's still money to be made within that range. Only problem is Shopify trades with a pretty ridiculous spread these days of about a point, $1 spread. So I may or may not trade it. It all really depends. If I do, I'll probably take small share size on it today. But Shopify earnings report, probably something to follow. BGVF, don't know. Kind of sounds like an OTC stock. BGVF. No, maybe it's not. Home Trust branches. I have no idea. It won't load for some reason. ABMD, yeah, we can touch on that. So ABMD is another stock that reported earnings today, dropped from 280 down to 223. It's at a previous earnings drop bounce right here. If you look, this is ABMD, dropped out to like actually the low is 227, so that's actually inaccurate. Anyways, yeah, it dropped down to 227, and we're a little bit lower than that right now. So the last time ABMD did this, it ended up bouncing all the way back up on the day. I don't think that's going to happen today. Today, I'd probably follow it short, but again, this doesn't trade the most volume, so do be careful, and the spread's probably going to be pretty big. Right now, the spread's actually not bad at all on it right now, but I assume when market opens, the spread on this is going to get a little bit wider. BGFV has a very high short float. If they have a very high short float, that means they have a very high short float. Just because something has a very high short float doesn't mean that it has to have a short squeeze. And it doesn't even have to mean that it has to go down, too. But a high short float is one of the characteristics you'd want to look for in a stock to determine if it does have short squeeze potential. When we say short squeeze potential, I mean like those big days where it squeezes like 30 points or some crazy. Good for Jeff. Honestly, Jeff the boy killing it. 1.8 billion shares sold. Wow. Wouldn't that be nice? Yeah, even Jeff was like, shit, we didn't break 2,000. I'm selling. Is ALXN at a buy price? Nope, not really. I mean, it could. I mean, yeah, there'll be probably like a little bit of a bounce or something, possibly, but probably not. I mean, if I were to buy it, right? If you look at this chart, where would you rather buy? Right, that's a question. Like, if you're looking at this chart right now, where would you rather buy? This red line here, or this green line? All right. Again, look at where would you rather buy, the red line or the green line? I'd probably rather buy the green line. So I'd say that no, ALXN or ALXN is not at the better buy price right now. KJK probably won't do live trading videos again, honestly. Yeah, to be completely honest, we probably won't. I mean, we might do some here and there, but probably not. Seeking Alpha is pretty good. Yeah, if you look at Seeking Alpha is pretty good. There's a lot of interesting interesting blogs and little articles you can read that have been written from other traders and other people. But yeah, I mean Yahoo Market Watch. I mean that is the news. There is nothing else more you can really. I mean, you could do Benzinga; those are paid subscriptions, but that's really just to get news alerts faster than most people. That's really just to get news alerts faster than your mainstream media sources. It depends, Dan. Sometimes I do one, sometimes I do two, sometimes I'll do 10, sometimes I do 15. Just depends on how the market's acting and what's setting up and how I feel about the day. CODX, honestly, whatever news they have, again, when you say what about it, it depends. If you're talking about investing, I probably wouldn't. It's a shit stock. Well, ever since I've known it to be a stock, it's been pretty shit. They have news this morning. Let me guess. They got a small little, yeah, there's nothing there, right? There's nobody here. Again, look at the stock chart. May I suggest a tip to you? Whenever you see a stock chart that looks like this, you can't day trade that. You cannot make money. So unless you're talking about investing, you'd want to stay away from something like this. If a stock looks like this and you're investing, that's fine. But if you're talking about day trading and a stock looks like this, then you want to stay away from it. So CODX, no. I mean, yeah, I could see Roku bouncing, but Roku's chart is just such a shitty formation right now. It's not even worth trading for me. I mean, look at this. Down, spike, down, down, what, spike? It's just, there's no real, well, actually, there might be some, there might be something there. Now I look at it again. Yeah, there could be a nice formation. But again, when you look at like the 4-hour chart, this is what I'm looking at. This is just an ugly chart. Down, down, roll, up, spike, down, roll, up, spike. If anything, I'd be more... I am now more of a short bias trader on Roku. I have been. But yeah, I'd be more of like a short bias trader on that for now. I'm not... And then again, I'm not crazy about the chart formation, so I'm really not one that is too crazy for even trading at the moment. There's no rule of thumb there, Joseph. Because you can do a market order and get your fill pretty much whenever you want. Yeah, if you do a market order, you're generally always going to get filled. So unless you're referring to limit order, then yeah, your size, you could be, it doesn't even matter. You get 200 shares and you don't get filled, right? So if you're going to do a market order, you're going to have generally no problems getting the amount of shares that you want filled. Whether or not it's at the price you want is another story. If you're going to do a limit order, you could have as low as 50 shares and not get filled. When you say normally, there is no normally there, because normally every single time the market maker will jump your order unless the price action of the stock is falling through your order price. So if that makes sense, let me put it this way, if you know exactly where the bottom of a stock will be, let me say this. If you knew for a fact, guaranteed, that stock ABC was going to bounce exactly at $100 today, that was the lowest price that the bid would be up for. If you knew ABC stock was going to go to $100 exactly, that was the lowest price being bidded on the level 2 or the time, it doesn't matter, just being bidded, right, on the stock. If you knew and you put your order down there at 100 to be filled, and then the price of the stock goes down to 100, you would most likely not get filled. Even if you knew it was going to bounce there, put an order out to be filled at 100, you most likely wouldn't get filled. But how? How, Connor? I thought the price went to 100. Well, that's the thing. If you knew exactly that the price was going to bounce at 100 and you put an order out for the price to bounce at 100, when the price action gets to 100 but no lower, the market maker would jump your order, because the market maker is meant and is supposed to be, and always is generally, the first person in line on the bid and the first person in line on the ask. And no one can be ahead of them. You can only jump them to have them re-jump you, which basically means if you put in an order at ACB at $100, knowing it would bounce there, the stock goes down to 100, no lower, immediately somebody else would cut you in line at 100, and as soon as it gets down to 100, it would start bouncing back above the price of 100 while your limit order still sits at 100. Next thing you know, price moves without you. The way that you would have to put your order in, if you knew exactly that the price of ACB was going to bounce at 100, you'd have to put in your order at like 110, 105. Because if it was meant to bounce at 100, then the market maker's order will go all the way down to 100. And while he's going through 110, or 110 cents or 105 cents, your order will get filled on the downward move to the support at 100. That was a lot to take in, I know, but there's really no other better way to explain it. So yeah, it really all depends. So we pretty much went over everything we need to discuss today. So today's stocks to watch for ENPH for continuation. Again, ENPH. AMRN, you might as well probably stay away from for most of you guys. It's not something you're probably going to want to focus on. Shopify, that one I'd still keep an eye on because it has big range on the day. So I would say probably the more likely than not, the one stock that most of you guys would probably aim to focus on out of the ones that I'm keeping an eye on would most likely be ENPH. Probably, yeah. All right, guys, everybody take care. Oh, no wonder why. Yeah, Robert, you're right. I forgot to put the dollar sign. I knew I was doing something wrong. Yeah, it's dollar sign DXY, you knucklehead. Durr. There we go. Duh. All right, perfect. Yeah, so if you see, that's what happened to the dollar yesterday. The dollar broke out yesterday is what happened, right? If you look at this 4 hour, that was a breakout, right? The dollar broke out, so gold obviously went lower. Wow. Surprising. Very surprising. Yeah, nice move though. Good move. All right, guys, everybody take care. Have a good day, and I'll see you guys tomorrow for another video. Am I buying Shopify? Possibly. Am I shorting it? Possibly. Depends on how it sets up in the day. All right, guys, take care. Have a good day.